Okay, so we're coming to you live right after the Fed's interest rate decision.
Fresh off the presses.
Yeah, so if you're listening to this, it's December 18th, 2024. Uh,
Big day.
Big day, big decision.
Yeah.
We've got the CNBC article here with us that's broke the news just a few hours ago.
This is the stuff that affects everyone, so we want to kind of break this down for you.
Yeah, everyone's talking about interest rates going up all year to try to fight inflation, and
Right. Everyone's wondering, did they go up again?
do they do it again?
Yeah. So what happened was the Fed raised interest rates again by a quarter of a percentage point,
Okay.
which brings the target range,
The range.
the range to 5.25 to 5.5%.
5.25 to 5.5. That's like the seventh time this year.
Seventh time this year, yeah.
Wow. So is that a lot historically? I mean,
Yeah, it means they're serious about tackling inflation.
they really want it.
They want to get this under control.
Okay, so let me just make sure I understand. So the federal funds rate, that's what banks charge each other.
Right. For overnight lending, it's kind of a benchmark.
Benchmark. So then that affects what, like I would pay for a mortgage or a car loan.
Exactly. It ripples through the whole economy.
So if the Fed raises rates, it's more expensive for everybody to borrow money.
Basically. Yeah.
So doesn't that like slow down the economy though? I mean, if it's more expensive to borrow?
Yeah, that's the tricky part. They're walking a tightrope.
Oh, okay.
They want to cool things down enough to curb inflation, but not so much that we end up in a recession.
Yeah, you don't want to overdo it. So I see in the article they're saying that inflation is cooling, but remains stubbornly high.
Stubbornly high. Yeah.
So like for someone who's maybe thinking about buying a house next year, what does that actually mean for them?
Well, it probably means they should expect to pay higher interest rates on their mortgage than they would have, say, a year ago.
So even if inflation is going down,
Right.
the interest rates might still be higher,
Exactly. And that can add up to a lot of money over the life of a loan.
especially like a 30-year mortgage or something?
Yeah, you're talking big numbers.
Okay, so speaking of the market, the article also mentioned how the stock market initially reacted to this announcement.
The market's always listening.
What's the connection there between interest rates and like what happens on Wall Street?
Well, generally, higher interest rates make bonds more attractive.
Oh, okay.
They're seen as a safer bet, so some investors will shift their money from stocks to bonds.
Okay, so out of the risk and into...
Yeah, into the safer stuff.
So that could actually make stock prices go down.
Potentially, yeah, it's all interconnected.
So it's almost like the market's giving its verdict on what the Fed is doing.
Yeah, kind of a vote of confidence.
Are they doing the right thing? Are they going to be able to bring down inflation without completely tanking the economy?
It's like they're trying to thread a needle.
So we've got this really interesting situation where the Fed is trying to fight inflation.
Yeah,
They're raising rates, but it's this really delicate balancing act.
it's like a high wire act.
And the article made it really clear